Good morning, good afternoon, good evening, yWhales, wherever in the world you are today. So it is May 16th. It is, we're should be in spring. There should be that kind of spring rush of cryptocurrencies and blockchain companies kind of coming alive for the year. And we're still seeing a lot of developers and project leaders still staying a little quiet right now. The most noise that I'm hearing is overseas. I'm American based. And we're just hearing so much about Dubai. We're hearing so much about the EU. And the only things that we're hearing a lot about in the US is no, and lawsuits. The SEC has just been absolutely brutal these past few weeks related to anything even related or touching cryptocurrencies or digitized assets. And I think that's really sad and scary. And so I'm super excited today for our guest, Camila Russo, because you have so much experience and really thought leadership in this area. So let me just, without a further ado, introduce our guest today.
Hi, Jay. Thanks so much for having me. Great to be here. I wish it was in a friendlier crypto environment in the US, like you mentioned, but it is what it is. And yeah, if I can just start, I can briefly introduce myself for your listeners who might not know me, if that's helpful.
Yeah, I mean, you're incredibly well known. Your book is selling in the 20,000 plus copies right off the bat, and so which is absolutely amazing, especially for something in an asset class as small as we are today. And so yeah, just a brief kind of background of how you showed up here today.
Sure. So I'm the founder of the Defiant, and the Defiant is the best and most trusted source for DeFi and Web3 information. We have our daily news that come on our website, defiant.io, a few newsletters, our podcast, our YouTube channel with daily videos. So, and everyone, please subscribe to all of the above. As you mentioned, I'm also the author of The Infinite Machine, which is the first book on the history of Ethereum. And previously, I was a reporter at Bloomberg News. That's where I got my finance journalism chops. I was there for almost a decade, based in New York, in Buenos Aires, and in Madrid. So that's a bit on myself.
No, that's fabulous. And I think what's so exciting to me when we have a journalist and an entrepreneur like you on is there is so much chaos that occurs every single day. And so we talk a lot about, if you're not following the news, if you're not keeping up with this asset class, whatever you knew last year is completely irrelevant. What you knew last week is almost certainly outdated as well. How do you, kind of keep up with just the chaos of this asset class?
Well, I'm kind of forced to, in some ways, because at the Defiant, we're staying on top of the industry daily with our coverage. Yeah, so I mean, we have our daily editorial meetings where we discuss the latest developments and news, and it comes from like all different sources. It's from announcements of companies that are flooding our inboxes. It comes from crypto Twitter, I think, is like a major source for anyone covering the space. That's where many developers and projects go first to make announcements or break news. And then just talking to people in the space. We make it a habit of being in projects Discord, like attend their community calls, just like being on the ground, reporting kind of in the trenches of Web3, visiting all the like governance forums. So I mean, the bad news about covering Web3 is that it seems really chaotic, and there's so much happening. But the good news is that it's really transparent from like on-chain developments that, if you can read the, Etherscan, if you can kind of make out what's happening on chain, it's all there for reporters. So it's an amazing resource. And a lot of these decisions, like I said, are happening in governance forums. So those are tools that as a traditional financial reporter, I couldn't have, had access to, but covering crypto and Web3, it's all a lot more transparent.
Yeah, and I think that's the biggest question I have is that, you know, there's no real kind of mainstream governance per se across the entire asset class. So there's no, you know, regulatory body, and that's the way we want it. We want it to be decentralized. But with so many scams, you know, there's every day there's, you know, some hack, a bridge, there's this, there's that, and a majority of our developer community is still, you know, and it remains anonymous. You know, and you guys do an amazing job of always prefacing these things in your stories. You know, how do you manage when you've got an anon developer that's promising the world, and there's serious repercussions if they're a scammer behind the scenes for you to publish what they're doing?
So it's a question like, how do we deal with
Yeah,
anonymous
how do you deal with the
sources?
anons?
Mhm. Yeah, it's something that I had to adjust coming from Bloomberg, which has, you know, very strict standards on like who you can call a source, like who you can publish and who you can't. So in covering Web3, you have to publish you know, anonymous sources because, you know, so much of the space is anonymous. Like so many highly regarded developers and founders are anonymous. I don't know, like Banteg comes to mind. Like he's leading Yearn Finance, like one of the biggest DeFi protocols out there, and he's anon. I've had a few founders on my podcast who are anonymous, and they've used kind of this a filter to not show their face, and I've been like having like really serious conversations with like an anime cartoon on the other side, you know. So like I had Chef Maki
Scooby Troobles.
Yeah, Scooby Troobles, yeah, Chef Maki from Sushi Swap and a couple of others. So you know, it's something that it's a new way of covering finance, allowing for these anonymous personalities to have a voice, because it is part of the ethos of this new financial system. You know, that it doesn't matter who you are, what your background is, it's, you know, where you come from. It's a lot more meritocratic in a way. It's, you know, anyone can contribute to these decentralized organizations. If your contributions make an impact, you can rise the ranks and, you know, become a leader of a project without ever having met any of your teammates. So it's a whole new way of working, and journalists have to reflect that in our work, in what we publish. But it does take a lot more experience because you have to kind of be so in the weeds, like in the community, and kind of know the space well enough to understand, okay, who actually has the track record, like who is trustworthy enough to interview and to quote for a story, and who isn't. So, you know, not just because somebody is anonymous doesn't mean that they shouldn't be held accountable, and shouldn't have like a track record that merits them to be quoted in a story.
You know, one of the most amazing things about Web3 and blockchain overall is just how fast, you know, the stories evolve. You know, when Bear Stearns or Enron, you know, had troubles, you know, it takes weeks to months for that to actually, you know, surface to the public, and then usually months, if not years, for us to understand what happened. When FTX, you know, like it went from like, hey, there may be something wrong, to full implosion, and then, you know, detailed analysis of where things were flowing, literally within hours of those things going down. And I'm sure that you're at that point, you're now getting inundated with your previous colleagues from Bloomberg saying, what's going on and how do you explain this? How do you even begin to educate the general population on something as complicated as what the FTX scam was early on?
Well, actually, I think that in the case of FTX, what happened isn't that new. You know, I think, you know, it was fraud, plain and simple, financial fraud, same as we've seen before in traditional finance. It was this organization which had an exchange and a hedge fund. It was, just to put it very plainly, Sam Bankman-Fried was stealing money from users of the FTX exchange to gamble it away at Alameda Research, the hedge fund. That's basically what happened in very simple terms. It had nothing to do with crypto, nothing to do with blockchain. So, I think any financial reporter who's, been in this space for a while has come across this type of fraud, unfortunately. So it's not unique to crypto. There are other aspects of covering crypto that are really complex and take, having to learn a whole new discipline. But in the case of FTX, unfortunately, it's something that we see time and time again.
So the Luna one would have been a much harder story.
Oh yeah, that's yes, for sure. Yeah, that's some type of like magical money kind of deal.
The blockchain pixie dust, as I like to call it. As long as we have you, and you're probably one of the most in-depth reporters on all this. What's your analysis right now of what we're kind of learning about what happened over a year ago, that the potentially jump was involved, that this was a malicious kind of attack? And I've heard both sides of the party. Some people saying, hey, it's not an exploit. It was there. It was fine. And others saying, hey, that shouldn't have happened because it hurt the entire industry. What's your kind of thoughts? No, there's no right answer on this one around what occurred with Luna.
Sorry, on FTX?
On Luna, I'm sorry.
On Luna. Okay. So my take on like the whole Terra Luna thing, it's so complicated.
That's why I'm asking you to explain it, because it really is hard to explain, the complexities of all the different players in there.
Yeah. So essentially what happened there was that this ecosystem had a stable coin called UST and a volatile asset called Luna. And this was all happening in the Terra blockchain. And Do Kwon is the founder and leader of all this ecosystem. And so what happened was that UST, the stablecoin, so stablecoins are tokens that are linked are pegged at 1-to-1 to the dollar, so that they're stable. And this stablecoin was backed by Luna collateral. So it was the way that that people were able to redeem dollars or like the dollar equivalent for every UST was by having this collateral backing of a Luna token. And then what was behind Luna itself was this lending platform called Anchor, which guaranteed 20% yield on Luna deposits. So that's the first red flag. Like whenever you hear a financial company guaranteeing returns, that's something to be concerned about, because returns can't be guaranteed. But this platform was offering these 20% returns for Luna deposits. So in theory, this whole ecosystem is what was maintaining the UST stable. What happened was that there was a sudden decline in the price of Luna. And this was very quick, and it was so quick that the ecosystem couldn't react fast enough to make up for the collateral that had been lost to back the stablecoin.
Yep.
So that meant that there wasn't enough collateral to back the UST stablecoin, and so people started selling off the stablecoin, and there was this like panic and bank run because the stablecoin didn't have enough collateral, and so people kept continuing to sell it, and so it was harder to back it, and so it was this kind of death spiral, which, ended up in the whole house of cards collapsing. That was like billions dollar ecosystem gone in just like a couple of days. It was the biggest crash in crypto history. It was, I don't think anyone had expected something as catastrophic as that happening to this player. I mean, before this, like Do Kwon was held as this like superstar, like the Terra Luna ecosystem. It was like an example of innovation in this space. But there had been examples before of crypto-backed stablecoins not working, and this had always been the case. That when there's a little bit of confidence lost, then there's this kind of death spiral that it's really hard to recover from.
Yeah.
And so that was what happened in this case. And the question here is, was it a scam? Like, did Do Kwon willingly trick people into buying Luna? I don't know. So the issue is that you had so many retail investors who ended up getting really hurt by this, because you had people who were holding this stable coin and who just wanted to make passive
20%.
income from Anchor, and they were told, I'm guaranteed 20% returns on this like thing that acts like $1, so it's a stable asset. So they were, from their point of view, they were in crypto, but they weren't gambling. They were holding a stable coin and they were earning passive income. And so that's what's troubling about this. It's a lot of retail people got hurt. So that's why this is hard, because on the one hand, like you should know like the risk that you're getting into. Like everything, unlike FTX, like this was open finance. Like everything was out in the open. It was smart contracts that you could have audited. It was collateral that, again, like unlike FTX, unlike Three Arrows, another catastrophe of last year.
And they were gambling. Like they were making horrible bets on weird NFTs and people compared to
But that was like all behind closed doors, right? FTX, Three Arrows. Terra, on the other hand, was all out in the open. It was a blockchain. You could see the collateral. You could see the price. The market realized right away when the thing started spiraling out of control. Like nobody was able to hide it. So on the one hand, if you were getting into Anchor, an argument is it was all out there. It was all transparent for everyone to see. You should know what you're getting into. Mm-hmm. And you took a bet, you took a risky bet, and it didn't pay off. On the other hand, I see the other side where it's like retail, like individual investors were guaranteed this return. They bought a stable coin and they got screwed. And when you're dealing with fintech or traditional finance, you're not required to understand, to a finance degree to hold stocks or hold assets. So it's like people who are just buying these tokens, it's like, okay, like why should I, learn like this programming language and kind of do a coding audit? Like they're not going to do that. So I don't know.
So my question is, and this is where you, in an amazing job kind of explaining what happened. And this is where I get to talk regulation. which is generally most people in blockchain's, least favorite thing. But to me, regulation isn't a bad word. It's about consumer protection and making sure that if someone's offering a financial vehicle that's going to, offer 20% or whatever the case is, that there's proper audits, proper security, proper, there's so many things right now we don't know about that crash per se. But I do believe that it was really kind of that first iteration that then caused Three Arrows and a variety of other things to happen down the road. Now,
Yep.
There was a lot of other problems inside those other companies. But, when you had this kind of first, card that took the whole house down, would have proper regulation, would have, correct audits onto their security, what their platforms are, what their reserves are, how to, doing the pressure testing and pen testing to ensure that like, hey, if you do suffer a 50% reduction in token price, what happens? And so what are your thoughts on, I know nobody wants outside regulation, but how do we as an asset class, how do we adopt proper regulation that protects all of us? Because right now I can't tell people that crypto is a safer system than the traditional finance system. It may be in some ways, but there's risks like this that are everywhere.
Yeah. So my take on regulation is that so in the case of Terra Luna, I don't believe that regulators should have stepped in that case, because I think there should be complete freedom for developers to experiment on top of open blockchain. Like in the end, it's people testing out these systems. This experiment didn't work. Down the line, there will be others that will work. And like I said, it might not be safer in all cases on the traditional financial system. At least it's transparent, and you have the chance of investigating what you're getting into, and when things start unraveling, at least in real time what's happening. Okay. So in the case of FTX, it took a leak by a news outlet to alert people that something was wrong. Yep. Months after, the first problems actually began. In the case of Luna, people knew right away that something was off. So in that case, I think it's a lot better than the traditional financial system. And again, I don't think that that should be regulated. I think developers should have the freedom to experiment. But I do think that there should be some requirements of reporting and disclosures for investors who are getting involved with these things. Because like I said, you can't expect users to have really sophisticated programming or financial knowledge to hold crypto. So I think there should be some minimal, reporting and financial disclosures. Have people at least have the necessary materials to become educated on what they're buying. And from then on, then it's everyone's own responsibility if they want to take on that risk or not. But at least, the right disclosures are there. I think it's different with centralized finance. So to me, like Terra Luna, that's decentralized finance. It's open source. When people transact in these systems, they are holding their own keys, their own private keys, their own wallets, and it's why nobody was ever restricted from removing their deposit from Anchor, say, or from selling UST or from selling Luna if they had to. Unlike all the failures of CeFi that we later saw, like for BlockFi and other kind of centralized lenders where people were restricted from withdrawing. That didn't happen in the case of Terra because it's it's DeFi, you hold your own keys, you have control over your deposits. So I think that regulation should be different, because I think the bar should be higher when there's a centralized entity that is holding other people's money, that is custodying other people's money. I think that's where regulators should come in, and I think there should be a lot more, registration requirements, licenses requirements, and to me, like, one of the lessons of all of the failures of last year was that I don't know that there should be a difference between CeFi and TradFi. So I think like centralized crypto has been dealing in this kind of gray area where it's custodying people's money. It's responsible for people's funds, but it's not being treated in the same way as a regular exchange is or a regular bank is. And to me, there's no real reason why they should be dealing in that gray area. And that's where people get hurt.
And I think the SEC agrees with you on there because, right now Coinbase is saying, hey, we need regulation. We need, clarification. And the SEC is saying, you already have it. Go apply for a banking license. Go do this. We don't care. As an analogy of, it doesn't matter if it's a gas powered car or electric car, you got to have a seatbelt. And while I think it's, that's overgeneralizing it, I'm not going to get into, my feelings on Mr. Gensler. I think that there are a number of regulations that these companies can follow. They may feel that it's different. And I think the problem you have is what they're selling. And what they're selling in a lot of cases, let's take Bitcoin and Ethereum and we'll just push those off to the side. But when you get into the meme coins, and that's my next question for you, is like, how do we as an industry, because I don't feel, and this is my feeling, I don't feel there's any value to meme coins. I think they hurt more than they help. And for every person that has made money on it, you've got a wake of thousands, tens of thousands that have lost money on it and are no longer interested in cryptocurrencies because they took a bet on a meme.
Yeah. So I think just to go back to the previous point about regulation. So yeah, I think that centralized crypto should register and should follow all the laws and regulations of any other entity custodying people's money. But at the same time, we've heard from many different players in the industry that it's not as easy as Gensler is saying to register. Like, people in crypto have been trying to comply, have been trying to play by the rules. They've been engaging in discussions with the SEC. They're actually asking the SEC to give them clarity. And, crypto is saying, give us a regulatory framework, tell us what steps to follow, tell us where to register, and we'll do it. But they're just not given any guidance. And so what ends up happening is that Gensler is saying, follow the rules, but then crypto is like, okay, but how? And they're not getting any guidance. And then they, instead of being very clear on what steps to follow, the SEC is instead regulating by enforcement. So it's like, okay, crypto players in the US, because they're not giving any guidance, they go up, they set up shop, they start trading or doing their operations, and then the SEC comes and slaps them with a lawsuit. And so that's how they end up knowing, okay, we were doing something wrong, but it would have been a lot healthier if they had known beforehand what they can and cannot do. So I think that's where the issue is right now in the US, and it's really it just hurts everyone. It's not protecting investors. It's limiting the growth of this industry. It's getting it's driving all the talent away outside of the US.
Yeah, and I'm sure you see it this just as much, if not more, than I do, which is how many companies are just packing their bags and leaving. They're moving overseas, and Micah, I think, is a great first step. They're continuing to evolve and grow that, but the point being is that they're at least thinking about this. They're holding conferences, they're holding hearings, they're wanting to have this, versus the hearings and the work that we see in the United States. To me, I feel like, Coinbase and Kraken and Gemini and all these guys did all this work with the SEC to say, here's how our business operates. Here, come on in. We'll show you how everything works and why we're so close. If you just do, A, B, and C, then we're there. And the SEC goes, that's great. And then they turn around, they sue them for A, B, and C. So it's like, we're almost telling them how to sue, the biggest players in our game. And I just don't know how they believe that this is not going to go away. We're just going to get, the United States is just going to get left behind in this massive, financial revolution.
Yeah. To me, it's baffling. Like, I do not understand why they're doing this. Why regulators are doing this. It has to be just, pressure from traditional finance, from the banking system. Maybe they feel threatened. I don't know. Maybe there's the argument that it's a political play because Gensler thinks that this will, play well with the current administration. So there's, many theories, but in the end, it doesn't really make sense for the US. It doesn't make sense for investors. Obviously, it doesn't make sense for the crypto industry. So I think, long term, what you'll get is that you had very small, kind of narrow-minded decisions based on personal gain, based on kind of political reasons, and not based on what should have been the focus, which is regular people, investors.
So shifting, a little bit in the conversation, are you an Ethereum maxi? Do you register with the term, or what's your feelings on kind of, do you believe there's going to be a chain that's going to kind of win this whole thing, or is it going to be kind of a chain of chains, a chain agnostic world?
And I realized we never got to the meme coin question. So
the meme coin, yes,
we come back to that one later on. But
yeah, let's jump. That's fine. No, they'll edit something here. So meme coins. What's your thought on these?
Okay, so meme coins. So I think there actually is some value there.
Okay.
Yeah. Of course, there's no kind of utility. Like you're not gonna use Pepe coin for anything, other than it's a fun joke.
Yeah.
But I think that's all the value. It's a joke. It's being in on a joke. It's almost like an NFT. It's being a part of a community of people who are in on the same joke that you are, and you just think it's funny. The first ever meme coin was probably Doge, and it's, for some reason, it's stuck around. It's still kind of among the top 10, I think, biggest cryptocurrencies out there. It doesn't do anything. It's just a fork of the Bitcoin blockchain, but it hasn't gone through any of the updates. So it's just people who like this Doge meme, and they think the dog is cute or whatever, and that's all. And same with Pepe. People who are extremely online, who are who live in the internet. They like this cartoon. They feel identified. I don't know, whatever. And they just want to own it. The same way that you would own a CryptoPunk or a Bored Ape. You want to own Pepe coin. There was even kind of this Gensler coin on, I think, the day that they sued Coinbase or something. No, on the day of the hearing, somebody issued a Gensler coin. And I was really close to buying it because I was like, this is hilarious. It's almost like a memento of that time in history that you can just hold it on your wallet. So I think that's kind of the value in it. It's just this community being in on a joke, and for some reason, their communities are actually, can become like multi-million dollar brands.
Oh,
That's what happened with Bored Apes, and and
yeah.
in like the non-crypto world as well. Like you just have, you know uh, brands that take off because of that, because of this kind of like more ethereal allure that they have.
No, and I completely agree with you. It's interesting to watch, and I've made probably, I think in 2 years ago my largest gain was from Doge, as I just go, you know what, it was, I don't know, whatever, like a third of a cent, whatever the case is, and you buy a bunch of the stuff, and I go, I feel like if in a bull run we're gonna, Bitcoin's done its thing, Ethereum and all the alts have done this thing, like let's play around with this, and okay, it's fine. My what really to me is so interesting is showcasing that anything can be, have monetary value, whether it's it's an NFT of random art, a one of 10,000, AI generated, somethings, or just this random meme coins. Cause I think where this is leading in the future. And I always say that, Web3 is all about ownership. Like whatever you want to own, you're going to have it on here. It's going to be on chain, and it needs to survive forever. And I think about things like Xbox points and, the things that, right now they just live in these siloed castles that no one can touch. But at some point, I mean, I probably have a ton of Qdoba points that I may or may not ever need. And if someone else wants to buy them, then these can create these little micro economies of, hey, I eat here all the time, but I don't want to use the coins, or vice versa. There's just, an ROI to it. Is that kind of the way you see this really weird economy building, where it's just DeFi is going to be constantly creating these liquidity pools of the most obscene and chaotic things you can imagine?
That's part of it for sure. It's the ability to tokenize things that couldn't have been tokenized before, or and that's another word of saying just like put value on things that couldn't be valued before. From like your like Qdoba points to likes on Twitter. All these things that were transactions online now can be they can have value, they can be transacted, and that the broader picture here of what's happening with crypto and blockchain is that there's this new layer being built on top of the internet. And I think, that's why I'm so bullish on DeFi and Web3. It's because it seems pretty inevitable to me that finance will be using blockchains as infrastructure, because it just is better rails for finance. It's these networks which were built to transact value in a way that our traditional finance infrastructure wasn't made for that. So things like Swift and ACH, that's based on just like really old messaging technology. Like it wasn't made for money, but blockchains were, and they were, they were made for having value transactions across the world in this very efficient way that doesn't require any intermediaries. So you should be able to cut costs, cut time in all your transactions. And so if you think of like the internet as being built on different protocol layers, so there's there's just the very basic node infrastructure for the internet, and then there's like the messaging layer, then there's like the email layer, and I have this whole podcast episode with the founder of Filecoin, on the super interesting, where he explains, how like the internet is actually made up of like all these different protocols. So what blockchain actually does is it adds one more protocol to the internet, so that we have messaging, we have email, we have all these different standards that the web is made up of. Now we have a new standard that's made for money, and it's so much better than the old standard that we're using for traditional finance. Now we're using a new standard that plays well with the rest of the web, that can integrate with all of the different applications that we use. And so that, all these tokens that give value to different things that just couldn't have value before, like Qdoba points, or like Twitter likes, or streams, or whatever, or like, JPEG monkeys, or whatever it is, now can have value and can be integrated with your, everyday applications. So I think, that's what's exciting about this. I think kind of like all the meme coin mania is just such a small part of crypto. It's a shame that that's what, a lot of people, it's like all they see, because they
That's
see
where they
these
get. That's where the
headlines
attention. It gets the headlines because it for a variety of reasons. So circling back to one of my questions before, my belief is, I'm chain agnostic. I think there's a lot of amazing chains out there. I think they all kind of serve the purpose, and at some point we're going to get to this world of chains and bridges and wallets, and it's just all like nobody right now on the internet cares who's hosting the website. Is it Azure? Is it S3? No, it doesn't matter. Does it work? And is it a good user experience? And right now there's still a lot of fiefdom, like I'm in the ETH world. I'm over in AVAX and a variety of other things. What's your feelings on where this is going to evolve to, or where it should evolve to right
now? So I'm definitely not any kind of maxi either. Also chain agnostic. In spite, you might think like with my book behind me, I and I might be like an Ethereum maxi, but no, I think that there will be a few blockchains that end up kind of consuming most of our time. And I don't think it'll be, dozens of them, because there are network effects. Like there is just efficiencies of a lot of people being in the same place, like just like liquidity being in the same place. So I don't think that you can have a lot of fragmentation across many different blockchains, because like just like bridging technology might get super efficient, but there's still risk whenever you're going from like one chain to another. So I don't think it'll be feasible to have like so much fragmentation. And I don't think it's feasible either to have a single blockchain do all things, because there are different trade-offs in each chain, which means that different chains are better for different things. To me, Bitcoin has really proved itself as this digital gold. Yep. It's just like this very resilient cryptocurrency. It's been around the longest. It's very hard to change it, and I think that's a good thing. I think it was so interesting to me to see the reaction of Bitcoin in the banking crisis in the US recently, when all these kind of regional banks started getting into trouble or failing, and at the same time, stablecoin were called into question because they had deposits in these banks.
Yeah.
So you had like nowhere to run. It was like you couldn't go to stablecoins because you didn't know if their collateral was in these banks, and then everything else was super volatile. People, aren't trusting even the US dollar very much because of
No.
inflation. So, Bitcoin was, I think, people did start to see it as what its original purpose, which is this hedge against chaos, against just like major failure of the traditional financial system. So I think, that's what Bitcoin is great at. But it's not great as this platform for building applications, which that's Ethereum. So you have DeFi being built on Ethereum, but then Ethereum isn't great at having really fast, cheap, high throughput, and that could be L2s, but it could be a third chain, where maybe you don't need all the security that you need for financial applications that you have on Ethereum, but maybe that's okay for like gaming or like social media. And so maybe that can be built on a different blockchain or on layer twos. So I think that's how it's going to play out. I think we'll have a handful of chains that they are each good at, different aspects, different applications, and hopefully we'll have a better kind of bridge technology that will connect everything, and kind of an abstraction layer that means that the end user doesn't have to care what it is that they're actually using.
I absolutely loving this conversation, and really it's because you see everything. For every story I'm sure that's online, there's dozens that didn't make it, and so that wealth of knowledge in your brain is just growing every single day. The biggest challenge I have right now, and I love, I'm a big Bitcoin fan. I'm not a maxi, but I believe it is, just as you said, one of the most important parts of our ecosystem. And mining is also, just critical to what this is. And we see massive public companies investing, insane amounts into alternative energy. So I really do believe that Bitcoin's proof of work is the net positive for humanity. But now there's people messing with Bitcoin. And I specifically mean ordinals. And so I'd love, before I go any further than that, just to hear your thoughts on, is this a good or bad thing for Bitcoin?
Ordinals is so interesting. It just like, like I said before, like Bitcoin has been there, stable, like not changing much until just like recently. It seems like there's like this explosion of activity happening, and it's messing things up. Like it's getting the network congested. It's making fees. I think they're at the highest ever, I believe. So I think it's hard to say whether ordinals are good or bad for Bitcoin. I think like my initial reaction when I saw it and when I saw what was happening was that this is great. Like there's innovation, there's activity happening on Bitcoin for maybe the first time ever, or by the most ever, and it looked like they were, the developers behind this were trying to do a lot of the things that are being done on Ethereum. So they were issuing NFTs. Then they had this kind of hacky way of getting a token standard similar to the ERC20 token, which they call the BRC20 token. Yeah. And so the idea is to have like fungible tokens issued on Bitcoin. And this is something that people have been trying to do forever. Like there was this project called Colored Coins, like very early on in the Bitcoin history. And that's where actually Vitalik started thinking about Ethereum, because it was just so hard to do on Bitcoin. So anyways, I mean, this has been something that Bitcoin developers have been trying to do. Now it looks like it's kind of starting to take off with Ordinals. So, it looks like a really positive development to me. But at the same time, I do see where Bitcoin maxis or some of them are coming from on Twitter, where they aren't very happy about ordinals, and that's because the good thing about Bitcoin is it's stable, it's digital gold. You can transact with it a lot for a lot cheaper than you can on Ethereum mainnet. Because there's not much happening other than just like Bitcoin transactions. So you don't have just like the bloat of all these, complicated programming transactions that happen on Ethereum, that elevate gas costs. So it does kind of start to undermine this like very simple but very useful use case for Bitcoin. So it's hard to say. I'll lean towards saying that any innovation is a plus. And in the end, for people holding Bitcoin and using the Bitcoin network, I think it's good to have more use cases and more stuff to do on Bitcoin. And maybe they'll have to start using layer 2, just like on Ethereum.
Yeah, I mean it's coming. Global adoption is going to need Lightning, and I think Lightning's done an amazing job of providing scaling, in a very, really, really well orchestrated way. As we kind of bring it to a close, let's circle back in with the Defiant and what you guys have planned, because you're in podcasting, you're on TV, you got there's books. I mean, it's amazing. So what are you guys working on now?
Yeah, so I'm super excited with what we're building at the Defiant. With my background at Bloomberg, to me, it's very clear the link that there is between content and data. And so at the Defiant, I want to bring that as well to DeFi. So I believe that in the future of finance needs professional, high quality financial journalism. I think that most crypto media up until this point have been focused on just general crypto news. So we're trying to be a lot more focused on finance reporting, specifically on DeFi and Web3. So just really trying to bring smart content and analysis on that sector within crypto. And to complement it with a really powerful data platform for investors and analysts to really quickly and easily access blockchain data and be able to visualize it and analyze it in a really highly customizable and personalized front end. So kind of like a very terminal-like platform. So that's what we're building. Super excited to have that live in the next few months. We have a closed beta right now that's open to our paying subscribers. That they can see kind of the very first skeleton of our Defiant terminal. So that's kind of on the platform side of things. And then more broadly, we're also exploring how to become truly Web3 native. And so build the Defiant in a more open way that allows for outside contributors and allows us to reward and incentivize those contributors. So thinking about what a DAO would look like for the Defiant. And also thinking about journalism as a public good. So if there's a way to incentivize investigative journalism with this more DAO structure, because I think it's pretty clear, especially in the past couple of weeks with like Vice, a part of Vice going bankrupt, BuzzFeed also. And there's just, it's been like a progression of news media just shutting down, especially like the investigative, more in-depth kind of journalism. There's not enough resources for it to thrive.
Yeah.
So I think we have a really good opportunity in Web3 to use these new tools and find a new model. for journalism.
Yeah, one thing I can say is scrolling through your podcast, which is extensive, and I don't think there's anyone in the industry that you haven't spoken to yet. And you know, when I hear you talking about that, it reminds me of Nader and DeSo, Decentralized Social, and I love what he did, and I think that it's had to take a couple pivots a few ways because social media websites are hard enough, and then a blockchain based one is really hard. But I loved what DeSo was doing, which is each person was a brand. Each page was its own brand with its own coin, and it made it really easy. But as you said, it's there's no right or wrong way at this point. We're so early in this asset class. So thank you so much. I really appreciate you coming by, and we hope to have you on a Fireside or Deep Dive. But absolutely a pleasure, and wishing you guys the best of luck, and we'll see you soon.
Thanks so much. Yeah, anytime. It was great.
Fantastic.
Thanks again.
yWhales, this is Camila Russo with the Defiant, and we'll see you guys next time.